Hey everyone, welcome back to Corporate Decoder. Today APMCU just filed a Form 8K announcing a partial exercise of their over-allotment option and founder share forfeiture. And I am seeing one thing that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing gives us a clear look at how much money the company raised and how their initial share structure is shaking out after their IPO. Alright, let's break down what happened with AmperCap Acquisition Company, ticker APMCU. This is a company that recently had its initial public offering, which is basically when a private company sells shares to the public for the first time. This report is from June 2026. And it is talking about some events that happened around their IPO. So AmperCap Acquisition Company, or APMCU, went public. They sold units and each unit was made up of one ordinary share and one right to get a piece of another share later on. Think of it like buying a share of stock and getting a coupon for a future discount. These ordinary shares, the main part of the unit, have a super tiny par value, practically nothing, just 1/10,000th of a dollar. This is pretty standard for companies going public. And those rights, they give you the right to buy 1/10 of a share of the company later if the company does something like merge with another business. It is a way to incentivize investors to hold on to the units. Now, APMCU is checking the box saying they are an emerging growth company. This is a designation for newer, smaller companies that can use some relaxed rules for a few years. It is like a fast pass to avoid some of the bigger company compliance burdens. This part is talking about shares that were sold without having to go through the full registration process with the government. Usually this happens in private sales, and they are referencing another part of this filing for the details. This is the main event we are looking at today, partial exercise of over-allotment option. Let's dive into what this means. When a company goes public, the investment banks that help them, called Underwriters, often get what is called an over-allotment option. It is like being allowed to sell a few extra shares if the demand is really high. So APMCU had its big IPO on the 4th of June 2026, selling 12.5 million units. Each unit cost $10, which means they brought in a massive $125 million right off the bat. At the same time, they also sold another 512,500 units in a private deal to their sponsor, which is usually the company that put the SPAC together, and the underwriters themselves, for another $5.1 million. These private units were the same price per unit, $10. Now, about that over-allotment option. The underwriters had the right to buy up to an extra 1.875 million units within 45 days if they needed more shares to meet demand. Here is the key point from the filing. On the 10th of June, the underwriters did exercise part of that option, buying an additional 1.837 million units. This means they sold a lot of shares, and the company got another big chunk of cash, about $18.3 million at $10 per unit. They decided not to buy the full amount they were allowed, leaving 37,500 units unexercised. So they didn't sell every single possible share. Also, as part of this exercise, the sponsor and the underwriters bought more private units, adding another $551,000 to the company's coffers. So after all this buying and selling, the company ended up with a grand total of about $144.8 million from these unit sales. This money is held in a trust account, which is standard for these types of companies, waiting for them to find a business to merge with. Now, there is another interesting part, forfeiture of founder shares. This is connected to that leftover portion of the over-allotment option because the underwriters didn't snap up those last 37,500 units. Something happened to the founder shares. On the 10th of June, 12,500 founder shares that were held by the sponsor were given back or forfeited. Founder shares are typically held by the company's founders or sponsors and often have different vesting conditions or forfeit clauses tied to the IPO success or how much of the over-allotment is used. This filing tells us that the company raised a substantial amount of money, around $144.8 million. However, the forfeiture of founder shares is a sign that the initial underwriting didn't go perfectly as planned, with a small portion of the potential extra shares not being picked up. This isn't a huge red flag, but it does indicate that the demand for the units wasn't quite as overwhelming as it could have been to fully maximize the over-allotment option. Looking at the broader picture, APMCU is a special purpose acquisition company, or SPAC. These companies are formed with the sole purpose of raising capital through an IPO to acquire an existing company, or merge with one. The clock is always ticking for them to find a target business. The fact that they raised this much money puts them in a decent position to make an acquisition. However, the marketplace for SPACs has been challenging, and many of them struggle to find suitable targets or complete their mergers within the allotted time. We've seen many SPACs eventually liquidate if they don't find a deal. The details in this filing confirm the initial capital raised and how the share structure is being adjusted early on. The partial exercise of the over-allotment option means they secured most of the funds they hoped for from this IPO process. The forfeiture of founder shares is a consequence of not fully utilizing that option, which is noteworthy but not necessarily a fatal blow. The key risk for any SPAC, including APMCU, is always the eventual business combination. Will they find a good company to merge with? Will the market like that company, and will the shareholders approve the deal? The success of APMCU hinges entirely on that future merger. What I'm actually looking for next is the announcement of their target company and the terms of that potential merger to see if it makes strategic sense and if the valuation is fair. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.